Question 1. Which of the following is not considered a type of hazard in the underwriting process? A. Physical hazard. B. Moral hazard. C. Legal hazard. D. Market hazard. Answer: D. Market hazard. Explanation: in the underwriting process, hazards are conditions that increase the likelihood of a loss occurring. There are three main types of hazards. Physical hazard: conditions related to the physical characteristics of the insured or the environment, such as faulty wiring or a dangerous location. Moral hazard refers to the behavior of the insured that could increase the likelihood of a loss, such as intentionally setting a fire. Legal hazard refers to conditions arising from the legal environment, such as laws or regulations that increase the potential for claims. Market hazard is not a recognized hazard in underwriting processes. This term is related to broader economic or financial market risks which aren't directly part of the risk assessment in insurance underwriting. Question 2. Mr. Williams is a newly licensed insurance producer in Arizona. He has just signed a client, and the client is about to make their premium payment. Which of the following actions should Mr. Williams take next according to Arizona law? A. He should immediately submit the payment to the insurer without delay. B. He should keep the payment in his personal account until the client instructs him to send it. C. He should ensure that the payment is forwarded directly to the insurer following all fiduciary requirements. D. He can hold on to the premium payment for up to 30 days before forwarding it to the insurer. Answer: C. He should ensure that the payment is forwarded directly to the insurer following all fiduciary requirements. Explanation: under Arizona law, insurance producers have fiduciary responsibilities, meaning they must handle client funds with a high level of care and integrity. Premiums collected by an insurance producer must be promptly transmitted to the insurer. Keeping client premiums in a personal account, option B, is prohibited and violates fiduciary duties. Failure to remit the payment timely, option D, or any delay in payment submission could lead to penalties. Arizona law mandates that producers follow these guidelines to ensure ethical conduct and protect the interests of the clients. Question 3. Scenario-based. Mrs. Davis, a 50-year-old client, has purchased a whole life insurance policy with a $200,000 death benefit and has paid premiums for the last 5 years. She has just experienced a significant financial setback and is considering surrendering her policy to access the cash value. Which of the following actions should Mrs. Davis consider before making her decision? A. Mrs. Davis can surrender her policy immediately without considering the tax implications. B. Mrs. Davis should review the policy's non-forfeiture options to determine if there is a better alternative to surrendering the policy. C. Mrs. Davis should immediately withdraw the full cash value from her policy to cover her expenses. D. Mrs. Davis should cancel the policy and assume she will not face any financial penalties. Answer: B. Mrs. Davis should review the policy's non-forfeiture options to determine if there is a better alternative to surrendering the policy. Explanation: surrendering a whole life policy may not always be the best option, especially if the policyholder is facing financial hardship. Non-forfeiture options, such as reduced paid-up insurance or extended term insurance, allow the policyholder to maintain some form of life insurance coverage while avoiding a complete surrender. Surrendering the policy without considering these alternatives, option A, or assuming no financial penalty, option D, could result in lost benefits and tax consequences. Mrs. Davis should explore her options thoroughly to ensure she is making the best decision based on her needs and financial situation. Question 4. Which of the following is a primary characteristic of a whole life insurance policy? A. The premiums increase over time as the policyholder ages. B. The policy provides coverage for a specific term, usually 1030 years. C. The policy builds cash value and provides lifelong coverage. D. The death benefit is paid only if the insured dies within the first 5 years. Answer: C. The policy builds cash value and provides lifelong coverage. Explanation: whole life insurance is a type of permanent life insurance that offers coverage for the entire lifetime of the insured as long as premiums are paid. One of the defining features is the accumulation of cash value over time, which can be borrowed against or used to pay premiums. Unlike term life, whole life does not have a specific coverage term and does not increase premiums as the insured ages. Option A. Option B describes term life insurance, while option D is not true for whole life policies. Question 5. Which of the following statements is true regarding Arizona's insurance fraud laws? A. The insurance producer can receive a referral fee for recommending a particular insurer as long as it is disclosed to the client. B. Insurance fraud penalties in Arizona include the possibility of criminal prosecution and civil fines. C. Insurance producers in Arizona are required to disclose their commissions to clients as part of the policy sale. D. A producer can use a client's personal information without consent if it is to benefit the client financially. Answer: B. Insurance fraud penalties in Arizona include the possibility of criminal prosecution and civil fines. Explanation: Arizona has strict laws regarding insurance fraud. Penalties for committing fraud can include criminal prosecution, civil fines, and other regulatory penalties. Option is incorrect because while referral fees may be allowed, they must adhere to specific regulations and not involve deceptive practices. Option C is incorrect as producers are not explicitly required to disclose their commissions, though transparency is generally required. Option D is incorrect because using a client's personal information without consent is violation of privacy laws and would be considered unethical and possibly illegal. Question 6. In the underwriting process, which of the following risk classifications indicates that the applicant poses a higher than average risk to the insurer? A. Preferred. B. Standard. C. Substandard. D. Decline. Answer: C. Substandard. Explanation: in underwriting, risk classifications determine how insurers assess the risk of insuring an applicant. Substandard risks are those that present a higher than average risk to the insurer, often due to health issues, dangerous occupations, or other factors that make the insured more likely to file a claim. These applicants may face higher premiums or may be declined. Option D. Preferred risks. Option A are the lowest risk applicants, while standard risks, option B, represent average applicants with no major health or lifestyle issues. Question 7. Which of the following is true about Arizona's requirements for continuing education for insurance producers? A. Insurance producers in Arizona must complete 20 hours of continuing education every 3 years. B. Continuing education courses must be completed only if the producer plans to renew their license. C. Insurance producers in Arizona are exempt from continuing education if they are over 60 years old. D. All continuing education courses must be approved by the Arizona Department of Insurance. Answer: D. All continuing education courses must be approved by the Arizona Department of Insurance. Explanation: in Arizona, insurance producers must complete continuing education courses to maintain their licenses. These courses must be approved by the Arizona Department of Insurance, DOI, to ensure they meet the required standards. Option is incorrect because the specific number of hours required is 40 hours every 4 years, not 20 hours. Option B is incorrect as C is required regardless of whether the producer intends to renew the license. Option C is incorrect as there are no age-based exemptions for continuing education requirements. Question 8. Mr. Smith holds a commercial property insurance policy for his business. A fire causes damage to both his building and inventory. Which of the following is the correct order of events in the claims process? A. Submit a proof of loss, notify the insurer, and then settle the claim. B. Notify the insurer, submit a proof of loss, and then settle the claim. C. Submit a proof of loss, settle the claim, and then notify the insurer. D. Notify the insurer, settle the claim, and then submit a proof of loss. Answer: B. Notify the insurer, submit a proof of loss, and then settle the claim. Explanation: the correct sequence in the claims process is as follows: notify the insurer about the loss promptly, submit a proof of loss, which provides detailed information about the damages and the amount being claimed. After a claim has been reviewed, the insurer will settle the claim according to the terms of the policy. The other options, A, C, D, are incorrect because they do not reflect the correct order of the claims process. Question 9. Which of the following is a key difference between a preferred provider organization (PPO) and a health maintenance organization (HMO)? A. PPOs require patients to choose a primary care physician (PCP) and get referrals for specialist care, while HMOs do not. B. PPOs offer more flexibility in choosing healthcare providers, while HMOs have more restrictions. C. PPOs have lower out-of-pocket costs than HMOs for patients who go out of network. D. PPOs typically cover fewer medical services compared to HMOs. Answer: B. PPOs offer more flexibility in choosing healthcare providers, while HMOs have more restrictions. Explanation: a PO allows members to see any healthcare provider without needing a referral and offers more flexibility to go out of network, although a higher cost. HMOs, on the other hand, require members to select a primary care physician (PCP) and get referrals for specialist care. They also generally have more restrictions on which healthcare providers can be used. Option is incorrect as the PCP requirement is a feature of HMOS, not PPOS. Option C is incorrect because PPOS typically have higher out-of-pocket costs for out-of-network services. Option D is incorrect because PPOS and HMOS usually cover a similar range of services, but PPOS offer greater flexibility. Question 10. Which of the following is not a valid reason for an insurer to refuse to renew a personal auto insurance policy in Arizona? A. The insured's vehicle was involved in a single accident during the policy period. B. The insured's driving record includes multiple minor traffic violations. C. The insured has failed to pay the premium after multiple notices of overdue payment. D. The insured has filed multiple claims for damage caused by a natural disaster. Answer: D. The insured has filed multiple claims for damage caused by a natural disaster. Explanation: Arizona law prohibits insurers from refusing to renew a personal auto insurance policy based solely on claims for damage caused by a natural disaster. These types of claims are typically considered unavoidable and should not impact the insured's ability to renew the policy. Option is incorrect because insurers can refuse renewal if the vehicle is involved in accidents, especially multiple accidents. Option B is incorrect as multiple violations on driving record can increase the risk to the insurer and lead to non-renewal. Option C is incorrect because failure to pay premiums is valid reason for non-renewal. Question 11. Which of the following would be an example of an exclusion in a homeowner's insurance policy? A. Coverage for theft. B. Damage caused by fire. C. Damage from an earthquake. D. Coverage for personal property. Answer: C. Damage from an earthquake. Explanation: exclusions in homeowners' insurance policies refer to types of damage or loss that are not covered. Earthquake damage is commonly excluded in standard homeowners policies, although it may be available through separate earthquake insurance policy. Theft Option A, fire damage Option B, and personal property coverage Option D are typically included in homeowners policies. Question 12. Which of the following is a characteristic of a general liability insurance policy for a business? A. It covers damage to the business's property. B. It covers the business owner's personal injuries. C. It protects the business from lawsuits related to injuries or accidents. D. It covers losses resulting from employee theft. Answer: C. It protects the business from lawsuits related to injuries or accidents. Explanation: general liability insurance protects businesses from claims related to bodily injury, property damage, and other accidents that occur on the premises or as a result of the business operations. It does not cover property damage to the business's own property. Option A, personal injuries to the business owner. Option B, or employee theft. Option D, which would be covered under other types of insurance. Question 13. Which of the following statements about auto insurance is true in the state of Arizona? A. Arizona requires all drivers to carry uninsured motorist coverage. B. Arizona law mandates that all drivers must have comprehensive coverage. C. Arizona requires that drivers have at least $15,000 of bodily injury liability coverage per person. D. Arizona requires drivers to carry collision coverage. Answer: C. Arizona requires that drivers have at least $15,000 of bodily injury liability coverage per person. Explanation: in Arizona, drivers are required to carry a minimum of $15,000 of bodily injury liability coverage per person, along with other minimum coverage limits for property damage and bodily injury. Comprehensive coverage, Option B, collision coverage, Option D, and uninsured motorist coverage, Option A, are not required by law but may be added for more extensive protection. Question 14. What is the purpose of an insurance policy endorsement? A. To cancel a policy before the renewal date. B. To modify the terms or coverage of an existing policy. C. To calculate the premium for the policy. D. To provide a list of exclusions under the policy. Answer: B. To modify the terms or coverage of an existing policy. Explanation: an endorsement is a written amendment or addition to an existing insurance policy that modifies the terms or coverage. It may add, delete, or change the coverage provided by the original policy. It is not used to cancel the policy. Option A, calculate premiums. Option C, or provide exclusions. Option D. Question 15. Which of the following is a characteristic of a term life insurance policy? A. It builds cash value over time. B. It provides coverage for a specific period, such as 10, 20, or 30 years. C. It provides lifelong coverage as long as premiums are paid. D. It can only be purchased for individuals age 4050. Answer: B. It provides coverage for a specific period, such as 10, 20, or 30 years. Explanation. Term life insurance provides coverage for a specific period or term, typically ranging from 10 to 30 years. Unlike whole life insurance, it does not accumulate cash value, option A, and does not offer lifelong coverage, option C. There are no age restrictions for purchasing term life insurance, option D. Question 16. Which of the following describes an indemnity insurance policy? A. It provides the insured with a specific payout amount upon a covered loss. B. It reimburses the insured for actual expenses or losses incurred up to the policy limit. C. It provides a guaranteed benefit regardless of the actual loss. D. It only covers losses that occur while traveling abroad. Answer. B. It reimburses the insured for actual expenses or losses incurred up to the policy limit. Explanation. Indemnity insurance policies are designed to reimburse the insured for actual expenses or losses incurred due to a covered event up to the policy's limits. This type of insurance seeks to restore the insured to the same financial position they were in before the loss, but no more, no profit from insurance. Option refers to fixed benefit policies, option C refers to guaranteed policies, and option D is irrelevant to indemnity policies. Question 17. In Arizona, personal injury protection (PIP) insurance is intended to cover which of the following? A. The insured's property damage. B. Medical expenses for the insured and their passengers, regardless of fault. C. Vehicle repairs for damages caused by natural disaster. D. Damage caused by an uninsured motorist. Answer. B. Medical expenses for the insured and their passengers, regardless of fault. Explanation. Personal injury protection (PIP) insurance covers medical expenses for the insured and their passengers regardless of fault in the event of an accident. PIP is designed to ensure that the injured parties receive medical treatment without delay, without needing to determine fault. It does not cover property damage, option A, vehicle repairs, option C, or damage caused by an uninsured motorist, option D. Question 18. Which of the following is typically covered under a homeowner's policy? A. Intentional damage caused by the insured. B. Damage due to flooding from a natural disaster. C. Theft of personal property. D. Earthquake damage. Answer. C. Theft of personal property. Explanation. A standard homeowner's policy typically covers theft of personal property both inside and outside the home. It may also cover damage from fire, vandalism, and some weather-related events. However, damage caused by intentional acts, option A, or flooding, option B, is generally not covered unless specifically added by endorsements. Earthquake damage, option D, is also often excluded unless the specific policy is purchased. Question 19. What does subrogation mean in the context of insurance? A. The insurer's ability to pay the insured more than the actual value of the loss. B. The insurer's ability to transfer coverage to another company. C. The process by which an insurer seeks reimbursement from third party for loss it has paid to the insured. D. The insured's ability to cancel policy early without penalties. Answer. C. The process by which an insurer seeks reimbursement from a third party for a loss it has paid to the insured. Explanation. Subrogation refers to the process by which an insurer can recover the costs of a claim paid to the insured from a third party that was responsible for the loss. For example, if an insurer pays for damage caused by another party, they may seek reimbursement from that party or their insurer. Options A, B, and D do not accurately describe subrogation. Question 20. Which of the following is typically not covered by a standard auto insurance policy? A. Liability for injury to others. B. Damage to your car from a collision. C. Damage caused by an earthquake. D. Theft of personal property inside the car. Answer. C. Damage caused by an earthquake. Explanation. A standard auto insurance policy usually covers liability for injury to others, option A, collision damage, option B, and theft of personal property inside the car, option D. However, damage caused by an earthquake, option C, is typically not covered under standard auto policies and would require a special endorsement or separate insurance. Question 21. Which of the following best describes the concept of risk pooling in insurance? A. Combining the risks of several individuals so that one individual bears the full cost of the loss. B. Spreading the financial risk of a large group of people to reduce individual costs. C. The process of paying higher premiums in exchange for better coverage. D. Offering discounted premiums to low-risk individuals. Answer. B. Spreading the financial risk of a large group of people to reduce individual costs. Explanation. Risk pooling involves combining the risks of many individuals to spread the financial burden of potential losses. By sharing the risk among many policyholders, each individual's financial exposure is reduced and the insurer can manage the overall risk more effectively. Question 22. Which of the following is typically covered by a flood insurance policy? A. Damage caused by a tornado. B. Loss of personal property from a fire. C. Damage caused by rising waters from a river or storm surge. D. Damage to a vehicle during a hailstorm. Answer: C. Damage caused by rising waters from a river or storm surge. Explanation: flood insurance specifically covers damage caused by rising water such as from rivers, lakes, or storm surges. Option C. Other types of damage, like those caused by tornadoes, fires, or hailstorms. Options A, B, and D would not be covered under a flood insurance policy. Question 23. Which of the following would be covered under a workers' compensation insurance policy? A. Workers' injuries while commuting to work. B. Workers' injury caused by pre-existing condition. C. Workers' medical expenses and lost wages due to work-related injury. D. Workers' injuries sustained while engaging in illegal activities at work. Answer: C. A worker's medical expenses and lost wages due to work-related injury. Explanation: workers' compensation insurance is designed to cover medical expenses, lost wages, and rehabilitation costs for employees injured while performing their job duties. It generally does not cover injuries sustained while commuting. Option A, resulting from pre-existing conditions. Option B, or caused by illegal activities. Option D. Question 24. In the context of insurance fraud, what does the term moral hazard refer to? A. The financial loss an insurer suffers from covering fraudulent claims. B. The increased likelihood of a claim being filed due to the insured's attitude or behavior. C. The legal consequences for an individual caught committing insurance fraud. D. The risk of policyholder intentionally causing damage to claim insurance. Answer: B. The increased likelihood of a claim being filed due to the insured's attitude or behavior. Explanation: moral hazard occurs when an individual's behavior or attitude encourages them to take more risks because they know they have insurance coverage. For example, someone might be less cautious about preventing theft or damage if they know their insurance will cover the loss. Question 25. Which of the following is a key feature of a permanent life insurance policy compared to a term life insurance policy? A. It provides coverage for a limited period of time. B. It accumulates cash value over time. C. It is less expensive than term life insurance. D. It is only available for individuals under 50 years old. Answer: B. It accumulates cash value over time. Explanation: permanent life insurance policies, such as whole life insurance, provide coverage for the entire lifetime of the insured and accumulate cash value over time, which can be borrowed against or withdrawn. Term life insurance, option A, is only for a specific period and does not accumulate cash value, and it is typically more affordable than permanent life insurance, option C. Question 26. Which type of insurance coverage would be most appropriate for a homeowner who lives in an area prone to wildfires? A. Renter's insurance. B. Flood insurance. C. Earthquake insurance. D. Fire insurance, or a comprehensive homeowner's policy with wildfire coverage. Answer: D. Fire insurance, or a comprehensive homeowner's policy with wildfire coverage. Explanation: homeowners in areas prone to wildfires should ensure they have fire insurance or comprehensive homeowners policy that includes coverage for wildfire-related damages. Renters insurance, option A, flood insurance, option B, and earthquake insurance, option C, are not designed to cover wildfire risks. Question 27. In the context of auto insurance, what is the primary purpose of collision coverage? A. To cover the cost of repairs to your car after a natural disaster. B. To cover injuries sustained in a car accident, regardless of fault. C. To pay for repairs to your car after an accident with another vehicle or object. D. To cover medical expenses for passengers in your car. Answer: C. To pay for repairs to your car after an accident with another vehicle or object. Explanation: collision coverage helps pay for the repair or replacement of your own car if it is damaged in an accident, regardless of who was at fault. It does not cover medical expenses, option D, or repairs from natural disasters, option A, nor does it cover injuries, option B. Question 28. Which of the following is an example of actual cash value received in an insurance policy? A. The full replacement cost of a damaged item. B. The market value of an item at the time of purchase. C. The amount The policyholder is reimbursed after depreciation is subtracted from the replacement cost. D. A maximum payout amount regardless of the value of the loss. Answer: C. The amount a policyholder is reimbursed after depreciation is subtracted from the replacement cost. Explanation: Actual cash value, a CV, refers to the reimbursement for a loss based on the replacement cost minus depreciation. This means the policyholder is paid what the item is worth at the time of the loss, considering its age and condition. Full replacement cost, option A, and market value, option B, are different from SCV. Question 29. What is the primary benefit of umbrella insurance? A. It provides coverage for damage caused by severe weather events. B. It extends the limits of liability coverage on other insurance policies. C. It covers the replacement cost of personal property. D. It covers medical expenses for uninsured individuals involved in an accident. Answer: B. It extends the limits of liability coverage on other insurance policies. Explanation: Umbrella insurance provides an additional layer of liability coverage that goes beyond the limits of existing policies, such as auto or homeowners insurance. It offers protection in case of large claims or lawsuits. It does not cover property replacement, option C, or medical expenses for uninsured individuals, option D. Question 30. Which of the following is not a typical exclusion in a health insurance policy? A. Cosmetic surgery for aesthetic purposes. B. Emergency medical treatment after an accident. C. Treatment for a pre-existing condition. D. Routine physical examinations and vaccinations. Answer: B. Emergency medical treatment after an accident. Explanation: Emergency medical treatment after an accident is typically covered by health insurance as it is considered essential care. On the other hand, cosmetic surgery, option A, pre-existing conditions, option C, and certain types of routine care, option D, may be excluded or limited under some policies.